everybody, and welcome to the Hump Day Market Update. I'm Lee Seiler, also known as the Stock Doctor. Thanks for joining us as we do this every Wednesday night at 7 p.m. And I say us because I have some members of my staff here, which are great people. I have the Megalennial in the house, Nikki Ward, and she can take your calls. If you have any questions, you can email Nikki at StockDR. And the Fiscal Therapist, that's his new name. I think he came up, actually it was my phrase that I think he inducted. He could have been something else. George Costanza tried to do this, but the Fiscal Therapist, Jared Bocart, and he does work with folks in the teaching community. So that's his primary market. Anyway, again, thanks for joining us. Tomorrow is going to be a huge day. We have the biggest stocks in the market going to be reporting. Except Microsoft, they've already reported, but the biggest stocks in the market all will report tomorrow. That is Apple, Facebook, Amazon, and Google. Alphabet, but I cannot call it Alphabet. That's stupid. All right, Google. They all report tomorrow. Not sure the timing. I know Apple's after the close. I believe Amazon's after the close. Check. Facebook was supposed to be today, but they had to do some cooking on the books or something, so they need an extra day. Not sure. That's a joke. All right. Let's talk about what the markets did today, though, because I got to tell you, we've seen some interesting movement here in stocks. And, I didn't want to do that. Okay. It's, let me do this. No. Okay. Let's see here. I'm not getting the charts, Nikki. Well, I'm going to tell you what they did. Yeah, that looks great, doesn't it? Okay. I'm going to tell you what the markets did today because for some reason, this stuff's not working. I got a new monitor in. I have no idea why it wouldn't work. But anyway, the Dow Jones Industrial Average was up 160 points today at 26,539. The S&P 500 up 40 at 3258. The NASDAQ up 140. That's 1.35% at 10,542. The small cap index, the Russell, leading the way again. And I have to tell you, I think small caps are getting pretty frisky right here. And they just broke above its 200-day moving average, which I would show you if I could. I'll try one more time. Okay, of course not. So the small caps look interesting. And I think that's something that we are going to take. We have very small position in small caps, so not a lot at all. And I think its timing is right because here's what happens. Usually when you are at the beginning of an economic recovery, small caps typically outperform. Okay, we'll see if that continues, but I think that could be a decent play. We have questions already, but the questions will have to wait because I want to talk about something that today, by the way, the Federal Reserve meeting ended, a 2-day meeting, and Jay Powell is, I'm checking my questions here, what we got. Jay Powell is, of course, interest rates are staying flat. He's got concerns, this new increased phase of the coronavirus. He's starting to see data getting a little soft as far as the economic activity. And so we have some serious concerns. I'm sorry, Nikki, what are you saying? Can you bring the charts from the right monitor to the left monitor? I probably could. Let me try something here. No, then I wouldn't be able to monitor it. Get it? We'll work on that later. It's not a big deal. I don't have that much to show on the monitors tonight. So the economy is starting to get a little sluggish once again. So the key here is, what is the Fed going to do? Look, they're going to put liquidity into the system. But then I won't be able to monitor it. So let me try something here. If I put it here.
Sorry.
No, it's okay. All right, we're trying to fix this for you. I don't know why it doesn't work. So the Fed, they're going to keep the system as fluid as they possibly can. Look, it's going to cost. It's going to cost us, and we know this. And now they're talking about more stimulus checks, which I'm all for helping people, and I'm, as a taxpayer, and I pay my share. I assure you, just like many of you or all of you do. But I think they should, and there's no way really to decipher, but it should go to the people in need. It shouldn't go to people that really don't need it. How do we figure that out? I don't know. So anyway, earnings come out tomorrow. Look, the market is acting. I mean, Apple is up today. Here's really interesting. Apple is up over $7 a share to close at $3.80. That's literally 5% below its all-time high. Unbelievable, right? Well, the volume on Apple was pretty good, not heavy enough, but we'll see what happens tomorrow. Facebook, of course, that stock was up today too, $3 and change, 1.38%. Apple up 1.29%, actually 1.92%. Amazon up $33, 1%. And Google, let me find it, up 1.45%. So the 4 stocks that report tomorrow are all up. Now, what happens if they miss? I don't think they're going to miss. What I think is potentially that can happen is they guide a little bit lower, because if they see another phase. Now, there was some news out of China that iPhone sales are going through the roof, but that's pent-up demand. So you probably saw some of that reflecting in the first quarter numbers. Now, the second quarter numbers, they missed out on 2 months of business for the most part. So we'll see what happens. But iPhone sales is going to be key here. We know the wearables are working well. The little things that the earbuds or whatever they call them, I don't have a pair, only because I know that I'll be losing at least one of them on a periodic basis. What I want to talk about, Kodak. Do you remember Kodak? Ticker symbol, by the way, it still has a ticker symbol. Shocking, because it didn't for a while. It used to be EK on the New York Stock Exchange. It used to be a Dow component in the Dow 30. Not anymore. Kodak, new ticker symbol, KODK. Kodak, the stock was quite a performer this week, and I will tell you why. I'm going to pull up a chart, although I won't be able to show it to you. Unfortunately, that's one I did want to show you. The stock has been trading for years between $1.50 and $2 a share. Up until Monday, when it peaked to about $2.63 a share, it's been trading about 150,000 shares a day. Well, on Monday, it traded about 1.8 million shares. See, Kodak got awarded, they got some money. I'm going to say they got awarded a contract, but the government gave Kodak some money. Not for their digital cameras, no. Not for their 35 millimeter film that they were selling when nobody was using 35 millimeter film. Not for their Polaroid cameras, no. To manufacture pharmaceutical materials. You didn't know Kodak could do that? They make 35 millimeter cameras, film. They had a great success with Polaroids. I don't know. It's crazy. But the stock, this news, they got $765 million from the government to work on this. Okay. They haven't proven they have good management. This, to me, it was a shill of some sort. I don't know what happened here, but I don't understand it. The stock went from 2.5. It jumped on Tuesday on the news. Remember, it traded 150,000 shares a day until Monday, the day before the news came out. 1.8 million shares traded. 1.8 million shares. On Tuesday, the news comes out, the stock jumps to a high of $60. From 2.5 to $60. I'm looking at it. The high of the day, $60, before it closed at $33. So some poor sucker bought it at 60, 59, 58, and now they're down big. That's why you don't chase this shit, all right? Do not chase stocks. So today it closed at 33 and up $25. Bottom line is wouldn't touch this with a 10-foot pole. This is, to me, it's a recipe for disaster. So we'll talk about that later. Apple, by the way, the earnings estimate, and that's what I'm concerned about. Apple, our largest position for our clients. I also own that personally. Apple estimates $2.04 a share on $52.1 billion in revenue. Let's move on. And by the way, tonight is sponsored by the Alley and Fuel Barbecue. Blade and Bow Bourbon. Now, what's interesting about this, it has a key. All right. So if you go to Kentucky, where they distill this bourbon, you have a bunch of lockers there, and you put the key in, and you will eventually find a locker in which the key fits. And then you will get all their Blade and Bow swag. Anyway, it's a nice, smooth bourbon, but check out the Alley/Fuel Barbecue. Remember, this is a restaurant, not a bar. Not a bar. But there's a fantastic band playing there this weekend, Friday and Saturday. You must make reservations. Skin Deep, from what I understand, the most incredible band in town. From what I understand, again, I don't know, but really what you have to look at is the rhythm section of that band. It's fantastic. Drums and bass. That's all you need. Throw in the keyboards. Guitars and vocals. Not bad. Anyway, check them out. Skin Deep, Friday, Saturday night at the Alley. That's adjacent to Fuel Barbecue because it is a restaurant. Let's talk about gold. Now, there are a lot of gold bugs out there, and I've seen these for years, and I am not a gold bug. We've owned gold. I do not own gold now. I did own gold as recently as a few months ago. I owned some of the gold for clients, some of the gold miners. Okay, for myself too. Look, as a money manager, if I can't do and invest next to my clients, because I have conviction of what I'm doing for my clients, I make the selections. I make the stock, the fund, all the investment selections for my clients. We don't third party that out, all right? A lot of firms, the big names, I'll tell you, the Merrills, the Morgan Stanleys, they third party that out. It ends up costing you more money when we can do a better job. And you have access to the money manager. That's what I do. So I have conviction in my ideas. I invest alongside you guys. I can't get the advantage pricing or anything. That's our rules. That's FINRA rules and SEC rules. But I invest in similar and most of the same things that clients do. So let's talk about gold. I'm not a gold bug, I told you, but it did hit $2,000 an ounce, the highest in history before settling down about 1944. You know, gold started trading on the CME in 1974. But here's something, and I respect, and everybody, I think, any investor respects Warren Buffett. He has always said that gold is a bad investment. And I think gold has not been a great investment. And it hasn't been a great investment until recently. But what he says, the reason, now keep in mind what Mr. Buffett does. He invests in value, and he invests in businesses. And what he's meaning there is gold is not a business. It's a shiny cube. It doesn't pay dividends, doesn't do business, doesn't make money. It only grows based on supply and demand. But I'm going to give you both sides of the coin, all right? I wrote these down, and I'm going to read them for you. These are the reasons people buy gold, all right? I'm going to give you the reasons. First one, there's 5 reasons why people buy gold for the most part. They can be traded and stored for future use. Okay, a lot of the big jewelers and all that, they buy the gold and they cheap and they try and make jewelry out of it. So that's okay. It's one reason. For jewelry, 50% of the gold goes towards making jewelry. So that's really what it's for all intents and purposes. It's a hedge against inflation. Well, they call it a hedge against inflation, but it has not been a great hedge against inflation. It's a hedge against uncertainty. That I think I've seen more of. When things get uncertain geopolitically or internationally, gold seems to get a little frisky. And diversification. It's simply another asset class to invest your money. And I say this all the time. A true diversified portfolio has assets in no matter what market. In an up market, you have assets that still go down in a truly diversified portfolio. In a down market, you hope to have assets that are going up. That's the definition of diversified portfolio. That not everything is going up at the same time or down at the same time. These aren't clients of mine, but I get phone calls all the time. People, hey, what do you think of this? What do you think of that? Because we do this, and we do this for a service to help people. We want to educate. That's part of this. And you know what? We also want to gain your respect, and hopefully you end up doing business with us. All right? Let us manage your money, because we do a pretty good job of it, and we got a great staff. So, clients call all the time and say, hey, I'd like to own this stock, this, that stock. It's 3 stocks. The chances of that portfolio being successful is few and far between, because you need to own a broad-based portfolio. You can't just have all tech stocks. You can't have just all bank stocks. You cannot. You have to maybe combine some growth, some value, small cap, etc. All right. So let's talk about the reasons to doubt gold. I'm not going to say to hate gold, but to doubt it. It's been a fairly poor performer over the years. Against stocks and even bonds have beat out gold over the last several decades. So stocks clearly beat gold. A study found that from 1972 to 2013, stocks beat gold whether rates were rising, falling, or flat. It also has been proved to not be a good hedge against inflation. This has been proven. Gold doesn't do anything. It doesn't make money. It doesn't pay dividends. So those are the reasons to doubt gold. Look, no doubt they're doing well. I have a very, very small position personally in gold. Very small. Not enough to be to weigh my portfolio one way or the other. And we do not own any for clients. And what I do is I just bought coins and put them in a box years ago. That's all it is. I wouldn't be a buyer here. I'm not a gold bug. If you want to put a little bit in your portfolio, 5% of your portfolio, that's fine. But I think gold is just a losing proposition. You know, we had other earnings today, and one of the big ones was Boeing. Boeing came out with earnings today. You know what? They missed expectations. We knew that Boeing was not going to be great. Okay, we had that. Look, I have my phone going on, and I have spam calls. Are you kidding me? Are you freaking kidding me? Boeing's net loss was $2.4 billion. Aircraft sales slowed, of course. However, news on the 737 MAX. There's talk that it could be out in October. I have to tell you, at $166 a share, Boeing's probably fairly reasonable. I'm not telling you to go out and buy the stock. We do own some for clients. And yes, I do own some personally. But I think at these levels, it's reasonable if you have a horizon. And this is not something that's going to happen tomorrow, next week, or next month. But I think that a year from now, Boeing could be trading significantly higher. You just have to be patient, and you have to have time on your side. If you're looking to retire next week and you need Boeing to make up your additional income, that's not going to happen. All right, so Boeing did $11.8 billion in sales for the quarter. They were expected $13.16. Revenues are down 25% year over year for the quarter, so that's pretty bad. So this morning the stock was actually trading up. When I saw that, I got a little excited, thinking, you know what? When a stock is going up on really bad news, the bottom's in. That's what happens. My 33 years experience, none of them, by the way, using Grecian formula, okay? No Grecian formula. You see that? That is all natural. Okay, I can't do anything about this. I did trim it down a little bit. And I did trim my nose hairs because I noticed last week that I had nose hair sticking out. That happens. You got part Italian in you, that happens. All right. We have some questions. Let's go to some questions. And all right, Nikki, I'm going to answer some of your questions. Oh, I got all these missed phone calls here. Bear with me. By the way, if you have any more questions, you can call the office or you can email Nikki. Ken. Oh, by the way, before I go into Ken's question, thanks, Ken, for asking the question. I want to talk about, I'm getting a lot of calls lately on, unfortunately, folks that have lost their jobs, because we've been saying if you lost your job, you can't just leave your 401k there. It's not in your best interest. I'm going to give you my scenario of a 401k. I get it if you work somewhere and you have to be in the 401k for the match. I totally understand that. That's what we tell people in our initial meeting. Are you participating in 401k? Yes, great. What's the match? 6%. How much you putting in? 5%. No, put at least 6 and probably more. That's our initial conversation. It is a great vehicle to have. The problem with 401ks is many of them have really shitty underlying investments. You have the 401k umbrella, which is all great. The matching and all that's great. But when they match you, they don't have to give you the greatest investments because you're already getting a return on your money for matching. Have you ever thought of that? So I've been looking at a lot of 401ks lately of people that are coming in saying, hey, I lost my job. I don't need this money because I'm going to get another job, but I want to do something with it. All right, so let's think about this. Normally in a 401k, you have 12 to 15 options. And a lot of the target funds. I think the target funds are shit. I think it's a lazy way to invest money. And they do this because it's profitable for them. They don't have to do shit. They just put it in a Fidelity Target 2025 fund. And, you sit there. And it doesn't do anything. So I'm going to give you this scenario. And I know there are a lot of sports people out there. And I'm going to go to our megalennial. I'm going to talk about Nikki Ward. Nikki Ward is a New England Patriots fan. Okay? And yes, there are a lot of you out there now. It happens after 6 Super Bowls, fair weather. Anyway, I will let you, and this is a really extreme example, but I will let Nikki come up with the greatest team of New England Patriots in the history of New England Patriots. Okay? Teddy Bruschi at linebacker. Of course, Gronk and Brady. Maybe Brady. I think we'll go Steve Grogan instead. What do you think? Steve Grogan? No. Okay. Brady. But let's come up with the greatest players. I can't even think of their running backs I've ever had. Randy Moss as a wide receiver. Okay. All the greatest players in New England history. Put them on one team, one imaginary team. And then we get to pick from the remaining 31 teams and have the greatest in history. So my middle linebacker is Dick Butkus. My quarterback, Joe Montana or Dan Marino. My running backs, Walter Payton, Barry Sanders. The greatest of the great. Who's going to win that Super Bowl game? It's not going to be New England, I assure you. It's going to be my super team. Well, Fidelity, John Hancock, Vanguard, all those 401ks, they're not super teams. They're not giving you the best of the best. They're giving you the easiest. So what we do is when somebody loses their job, the process and the protocol to do this is to open up an IRA rollover. That makes it a tax-free exchange. So you go from your 401k, they literally, oftentimes, send a check. Right to TD Ameritrade. We use TD Ameritrade and Schwab, but they're merging together, so we use TD Ameritrade for the most part. Check goes to TD Ameritrade in your name in an IRA, and now we have free reign to do whatever you want to do. Have you, in your 401k, did you have the opportunity to buy an Apple? Do you have an opportunity to buy an Amazon? No. We now have given you that opportunity. We can do whatever that's in your best interest with your objectives in mind, and that is huge. I mean, that is absolutely huge. So if you have a 401k, and a lot of people have old 401ks, they've left them there for years. And it's even worse because I've come up across situations where someone said, yeah, I have an old 401k over here. Come to find out his ex-wife is a beneficiary. How do you think your new wife's going to feel when your ex-wife, if you croak and your ex-wife is getting that old 401k? I'm going to start closing things up here in a little bit, but I really appreciate... Oh, did I answer that question, Nikki? I don't even know now. But I want to talk about cannabis. And so, okay, I'm sorry. Ken asked... I didn't get to Ken's question. But I'm going to talk about cannabis first, because that may be something that can answer Ken's question. Ken wants to know, what sectors do I think will lead the way in economic recovery? So I want to talk about cannabis real quick. They had a big day yesterday across the board, up 10, 15%. There's headlines out there that a Joe Biden win will get cannabis federally legalized. Because right now, even though it's legal for recreational use in Colorado, the dispensaries can still get shut down. It's federally illegal. They cannot use our banking system to store their cash. So, if this gets cleared, that is huge for the cannabis industry. The cannabis industry has been under a lot of pressure, and we own some cannabis stocks in small quantities, just dime bags full. That was a joke, by the way. So, it's been terrible. It's been an awful sector, but I think there is some movement here, some room. So that could be a sector that's going to move higher. But Ken, to answer what I really believe on the true sectors you want to have a percentage of your portfolio in, cloud, anything with cloud, anything with cybersecurity, I think is huge. 5G, and what we like to do is own funds in those industries. There's a cybersecurity fund. There's a Sky Technology fund, a cloud technology fund. Those are going to be huge. Those are the growth components. I mean, anything in technology is going to be growth. I think the middle of the road, I'm going to have your slow lane, middle lane, fast lane. The fast lane is going to be cloud, 5G, biotech. The middle lane, healthcare, because healthcare is huge right now. And I'm not just, biotech is different. Biotech stocks are like Moderna. They're trying to find cures. I'm talking about healthcare, which could be Quest Diagnostics, it could be Stryker. It could be the hospital companies. It could be the medical insurers, United Healthcare. Those type of companies. They are your middle of the road. And then the slow lane, which I think are huge values here. And I think you should have parts of these in your portfolio across the board. I think that's important to have slow lane, middle lane, fast lane, because something is going to move when something is not moving. And I still believe that the financials have huge opportunity a year down the road, but you can't be so short term. There's no such thing as being a quick buck artist in the stock market. And the Robinhood people, I'm really surprised. And I'm not, again, I always say I'm really pleased that people are investing. But I know what Robinhood people do. They're for the most part, they're buying dollars and a little bit here and there when they have change in their account. But top stocks they're buying. And I'm going to look at them right now. And I'm sorry I couldn't show you charts tonight. There's something screwy going on, but I will fix it, I promise. Ford is a top stock for them still. And that's been interesting. And I think it's because of the price. I think it's because it's $6.92 a share. GE came out with numbers today. They missed on earnings. They beat on revenue. And the stock's also a cheap stock at $6.59. American Airlines, we know why they're buying that. Disney, you know what? It's a great company, and I think they're buying smart there. Delta Airlines, again, we know why. They're speculating. They want to see when this thing turns around. But my concern is that the travel industry, meaning the airline travel industry, we know the cruise industry is going to be in deep shit, but the airline travel industry is never going to be the same. I think that, and I talked to a lot of my vendors that used to travel a lot, and they're saying, you know what, we're doing just as much business staying at home on Zoom. And they say, we're getting fat and happy, but, the keyword fat. So, they're buying Apple. Okay, I wouldn't buy it here, but that's okay. Microsoft, great. Tesla, okay. I wouldn't buy it. I said last week Tesla was the short of the century at $16.50 a share. Today, Tesla, and it got down to $1,300 and change, and today Tesla closed at $14.99, up 22. But, if you sold Tesla in the 1600s, like I said, sell Mortimer, you did fine. Carnival Cruise Line, we know they're speculating there. Carnival closed today at $14.65. It's an abomination. At some point, it will rally when the crews get back up and running, but who knows when that's going to happen. And let's talk about GoPro. That's one of their other ones, one of the top 10 lists. GoPro up, it's been actually doing well at $5.22 a share. Now, I want to give you my pet peeve before we go. Why in the hell does Dodger pitcher Joe Kelly get suspended 8 games for throwing at one of the Houston Astros' head when none of the Houston Astros get suspended, except for the manager gets fired, fine, lose first round picks, but none of the players got suspended. So, for cheating. Okay, I will tell you why. It's kind of rhetorical. I know my own answer. It's because he threw it at his head. I throw it at his body, throw it at the ribs. You want to hit him. You don't want to hit him in the head and kill him. And I think it can kill somebody. So, anyway, I have a problem with that. I don't like cheating. I think that the Houston Astros, that's a disgrace to baseball. They screwed the Dodgers. I get it. I totally get it. They screwed my team, the Yankees. Totally get that as well. But anyway, I appreciate everybody joining me this evening. You guys are always great. Please share this video. If you think there's value here, share it. If we can help you, call the office, email me. Numbers are down here. Email Nikki or Jared. Everybody is Jared, Nikki, Justin, Patty, Courtney, and I'm Stock Doctor at StockDR.com. But everything, the domain is StockDR.com. Check out the website. We got a lot going on there. We have events coming up. We're going to do some virtual events, unfortunately. I know you were sick of webinars. I'm freaking sick of webinars. Everybody says, hey, let's have a meeting. I don't want to see your face. I'm sorry. Meanwhile, I do this every Wednesday night. I'll catch you next Wednesday night. Thank you very much. Have a great evening.